So I want to show you guys a couple reversal candle patterns, how to spot them, how to trade off of them, and how to basically use them to get out of a trade that you're already in. First off, I only use these on the 15 and 30 minute. Anything lower is just going to give you a false signal, also known as a fake out, which is why I don't really use it. First off, let me go on the 30 minute. We're on gold right here, and just look at the shooting star. Yeah, it's basically a small body. It's got a long wick on the top right here, and it's usually found at the top of a trend. Always at the top of a trend. If it's not at the top of a trend, it's not valid. And it's got little to no wick at the bottom usually. So look what happened after that. I mean, we literally dumped for 420. Yeah, it's something literally like 720 ticks or more. And if we were to get in on here, I mean, we would have had like we would wait for the push up. First of all, you want to wait for it to push up, then you want to go short. So we're looking about an 80 tick stop. So you'd have to go live on that one, but it would have paid you hella big either way. And then we can determine targets by jumping down the 15 minute or 5 minute from there. And you could use this low as a first target. That's where I bounced off of before. And maybe this low right here. And then our final target could be like right here. And we would have most likely hit all of them. Literally, without hitting break even, we pretty much hit all of them. After this first trim, you would have went break even. And after the second trim, you would have trailed it up to right here. And the final target, you are out right here. Now, when we go short right there, we can also get out because of this dragonfly doji. It's another important candle pattern. So, small body, long wick. Wick is 2 times the size of a body or more, just like a shooting star, except it's the opposite. It's found at the bottom of a trend. Little to no wick on top. And from there, we had a bullish run up. So, that's a very good idea to take profits because of this candle pattern right here. And if we were to enter off right here, you would go, you're already on the 15 minute, so you would first use this as a profit target. So use your highs and lows basically. That's what you're gonna want to do. And the next profit target could be like probably this, your next trim, and your final target could be this. And of course, you know, after the first trim, which is right here, your stop is break even. We would have never hit break even. As a matter of fact, we're on our way to our second trim. After our second trim, you move your stop right here where the first trim was. That's how you play these reversal candle patterns. Now you want to use these with confluence with like a zone or maybe supply and demand or something like that. So it's more valid. You don't want to use these by themselves. Let me look for some more examples. Jump on the 50 minutes. I guess you can see this hammer right here is another one. It's got to be at the bottom of a trend though. And as you can see from there, we had a pretty decent run up. I mean, we ran up like 60 points or so. And our stop loss is 37 points. So that one was decent, especially for the type of PA that we've had recently. It was good. Okay, this is a good example on when not to enter. Yes, you have the shooting star, but is it at the top of a trend? No, because look at this. We already have a wick going right here. So if it was right here, I mean, it would be more valid. It's not really valid. It's not at the top of a trend. That's where most people get mixed up. This is perfect right here on the 15 minute. This is so ideal. I mean, this dragonfly doji right here. Perfect example right there. Let me zoom in for you guys. Right there. Stop loss could have been at the bottom. And could have entered. First target could have been this swing high right here. Second target would have been right here. And our final target would be right here. We would have hit all of them perfectly. That is how you play the Dragonfly doji when you are entering. This is so perfect. I mean, this is a shooting star. Pretty much at the top of a trend. As you can see, we had a massive move down from it. So we could have entered short right here. This could have been our first target right there. This could have been our other target. And our final target would have been right here. We would have hit all of those so perfectly. Like, that was literally like 300 ticks. That was literally right on point. That's what you want to look for. Again, this is more like a hammer candle, because body is bigger than Dragonfly doji. Dragonfly doji is usually thinner, but it would have worked out too. You can see they're very powerful. On the 5-minute or lower, they're not really good. So you want to always use 15-minute or up. Again, right here, bottom of a trend, move up, and guess what? We had the shooting star, then we dump. See how perfect that works? When you incorporate these, you can see yourself getting out of trades too. So say if you're in a short and you see this candle pattern, and maybe you're short from here, as soon as you see it close like this, you might want to get out, because it's probably going to hit your break even, which it did. And if you're long and you see like this shooting star, and you can kind of see we dumped, that shooting star should signify that you should get out of your longs. Let me see. This is perfect right here. Again, another shooting star. So if you're going long, maybe you're about right here, and you see this kind of close like this, you might want to get out of your position. Because guess what? After that, we just dumped so perfectly. And of course, if you're entering off of this, wait for a little push up. Your entry is probably going to be about right there. And first trim is going to be right there. I would target this low right here. And then finally this wick. So use your swing highs and lows. And we're going to hit those so perfectly. It plays out so well.